Now we will start discussion related to segment 9 composition scheme. So composition scheme, basically it's a simplified scheme for payment of GST at reduced rates. Rather than paying GST at the regular rate, a person who is under composition scheme will pay GST at the very reduced rate, like 1%, 5%, 6%, like that. And is this composition scheme optional or mandatory? Optional. So therefore, if the person wanted to decide for composition scheme, they can decide for composition scheme. So it is not mandatory like they should go for composition scheme like that. So it is up to them. And there are two types of composition scheme, that is composition scheme under 10.1 and composition scheme under 10.2a. And only when composition scheme under 10.1 is not possible, they go for composition scheme under section 10.2a. And the disadvantages, there are some disadvantages of composition scheme, that is, if a person is under composition scheme, they cannot take ITC on their inward supplies. So they cannot take ITC on their inward supplies. And second disadvantage is that they cannot charge GST to their customers. Means they need to pay reduced rate. That reduced rate they will pay out of their pocket. So that is a disadvantage of composition scheme. And advantages of composition scheme is that total profit increases, because the sales volume will increase na. As the sales volume increases, the total profit also will increase. How the sales volume increases? I am under composition scheme, I will not be charging GST to my customer. When I am not charging GST to my customer, so definitely he will prefer me over other person who is charging GST. For example, there are two shops. Shop A which is not charging GST to you. Shop B which is charging GST to you. Same product, no change in that. So definitely you will go and buy from shop A, because they are not charging GST, so the sales volume will increase. When the sales volume increases, automatically the total profit, even though profit per unit is less. Why profit per unit is less? Because they cannot take ITC on their inward supplies and they have to pay GST out of their pocket and they cannot recover the GST from recipient. But the overall profitability, if you see, that will increase because the sales volume will increase. So advantage of composition scheme is that the total profit increases as sales volume increases, and it reduces compliance cost. Why it reduces compliance cost? Because there are a lot of benefits in composition scheme, like they don't have to maintain all accounts and records. They need to maintain only some accounts and records. What are the accounts and records to be maintained by every registered person? I formats. I for inward supply, F for foreign trade, import and export, O for outward supply, R for RCM supplies, M for manufacturing and production related records, A for advances, received, paid and adjusted, then T for tax details, S for stock details. But a person who is under composition scheme is not required to maintain tax details and stock details. Also, person who is under composition scheme, rather than filing monthly returns, are required to file quarterly returns, and they need to pay tax also on a quarterly basis. Okay, so due to that reason, so there is a reduction in the compliance cost, and compliance cost as tax is payable quarterly. So these are the advantages and disadvantages of composition scheme. Now we are starting with composition scheme under 10.1. So who can opt for composition scheme under 10.1? Any person whose aggregate turnover during the previous year does not exceed 1.5 crores. And in case of 8 states, it will be 75 lakhs. What are those 8 special category states? That is M, T, N, U, SAM. Manipur, Mizoram, Tripura, Nagaland, Uttarakhand, Sikkim, Arunachal Pradesh and Meghalaya. So these states, it will be, we need to take 1.5 crores. Aggregate turnover during the previous year does not exceed 1.5 crores. And in case of 8 states, it will be 75 lakhs. Okay. And there are some places where we have state specific information. You kindly make note of that, because so this will be helpful for you, because like different places we come across this state specific information. First, we have special category states as per constitution. So what are the special category states? What are the special category states as per constitution? As per constitution, article 279A. Article 279A of constitution, there are some special category states. What are they? They are MMTN. What is MMTN? Manipur, Mizoram, Tripura, Nagaland. Then A, that is Assam. S for Sikkim. A for Arunachal Pradesh. M for Meghalaya. then H for Himachal Pradesh, U for Uttarakhand, and J for Jammu and Kashmir. So these are considered as special category states. So MMTN, Manipur, Mizoram, Tripura, Nagaland, Assam, Sikkim, Arunachal Pradesh, Meghalaya, Himachal Pradesh, Uttarakhand, and Jammu and Kashmir. These are considered as special category states as per constitution. Then next one we have, so like states for which applicable threshold limit is 10 lakhs. So applicable threshold limit for registration, applicable threshold limit for registration, applicable threshold limit for registration is 10 lakhs. What are the states for which applicable threshold limit is 10 lakhs? Only MMTN, Manipur, Mizoram, Tripura, Nagaland. These are the 4 states for which the limit is only 10 lakhs. Then applicable threshold limit, for registration, applicable threshold limit for registration is 20 lakhs. So what are the states for which applicable threshold limit will be 20 lakhs? That is U stamp states. What are the U stamp states? Uttarakhand, Sikkim, Telangana, then A for Arunachal Pradesh, M for Meghalaya, P for Puducherry. Uttarakhand, Sikkim, Telangana. It is Telangana. Then A normal Arunachal Pradesh, not Assam, Arunachal Pradesh, and M Meghalaya, P for Puducherry or Pondicherry. Then next one we have starting point or ending point in economy class. Transportation of passengers is exempted. Okay, so transportation of passengers by what mode? Transportation of passengers by which mode? By airways. Transportation of passengers by airways. And in this transportation of passengers by airways, in which mode? Economy. Like which class? Economy class. Economy class, where starting point or ending point, starting point or ending point in, so transportation of passengers by airways, starting point or ending point is in which places? It is in northeastern states. What are those northeastern states? Manipur, Mizoram, Tripura, Nagaland, then Assam, Sikkim, Arunachal Pradesh, Meghalaya. So these are northeastern states. Northeastern states. Thereafter one more place is there, Bagdogra in West Bengal. So these are the states where if the starting point or ending point of the passenger is by way of economy class in airways, then it will be exempted. The transportation of passenger is exempted. Then next one, applicable limit for lower threshold limit for composition scheme. That is composition scheme under section 10(1). So what is the limit? Specified limit. Aggregate turnover limit is 75 lakhs. So what are the states for which aggregate turnover limit is 75 lakhs? You remember M, T, N. Then USAM. MMTN same, Manipur, Mizoram, Tripura, Nagaland. Okay. Then U for Uttarakhand, S, A, M. So Sikkim, Arunachal Pradesh, not Assam, Arunachal Pradesh. Okay. So these are the states that you need to remember. So in this all the points are covered. So wherever we come across different states, everything I have given in one place. Okay. So it will be easy, and what is that MMTN etc. and all you make note later point of time. Okay. So therefore, in case of 8 states, the limit will be 75 lakhs, that is under 10(1) composition scheme. So first we are discussing composition scheme under 10(1). If my aggregate turnover during previous year does not exceed 1.5 lakhs, in case of 8 states it is 75 lakhs, I can opt for composition scheme. And to whom it is applicable? Manufacturer, trader or supplier of food service provider. However, if they are a manufacturer, trader or food supplier, food service provider, they can provide any other service. To what extent they can provide service? Up to 10% of turnover during previous year or 5 lakhs, whichever is higher. For example, so I am a manufacturer, I want to provide some after sale service. I am a trader, I want to provide some delivery service, or restaurant, I want to provide some packing service or delivery service. Then in that case, to what extent I can provide the service? See the turnover during previous year. Say the turnover during previous year is 180 lakhs. So then first of all, I will not be into composition scheme this year. Suppose if the turnover during previous year is 120 lakhs, 120 lakhs into 10% is 12 lakhs. 12 lakhs or 5 lakhs, whichever is higher, 12 lakhs. To the extent of 12 lakhs, I can provide the services and I will be into composition scheme. That is this. So however, they can provide any service up to 10% of turnover during previous year or 5 lakhs, whichever is higher. What is the benefit of reduced rates? If I am a manufacturer, I will pay 1% of total turnover. Manufacturer will pay 1% on total turnover, and supplier of food service provider will pay 5% on total turnover. And if there is a trader or service provider providing service up to 10% limit, trader or service provider up to 10% limit, so 1% of taxable turnover. Okay, 2 people, 1% of taxable turnover, that is a trader, or this 10% limit of services they provide now. In that case also 1% of what turnover? Taxable turnover. Rates you need to remember. Manufacturer 1% of total turnover. Supplier food service provider 5% of total turnover. Trader or service provider providing service up to 10% limit, 1% of taxable turnover. You remember the rates like this, but when you write in exam it should be 0.5% CGST, 0.5% SGST, because a person who is under composition scheme should not make interstate supplies. They should make only intrastate supplies due to that reason. Then what is the current year limit for the reduced rates? Current year up to 1.5 crores or 75 lakhs, they will be into composition scheme. The moment they cross at 1.5 crores or 75 lakhs, they will be disqualified from composition scheme and they will be going into regular scheme, normal scheme. Okay, and some people cannot opt for composition scheme under 10(1). You can see that in the next page. Composition scheme under section 10(1) is not applicable. But all these restrictions we need to see for the current year. Means previous year I can make interstate supplies, previous year I can make non-taxable supplies, but all these restrictions are applicable for the current year. So following restrictions are for the current year in which composition scheme is opted. You need to remember these cases where they cannot opt for composition scheme with a mnemonic S9 RCM. Section 9 is RCM, correct? Section 9 is RCM. You remember like that. Section 9 is RCM. So S9 RCM. S for service provider. Which service provider? Which service provider other than supply of food? Because only 3 people can go for 10(1). Manufacturer, trader, supplier, food service provider. Suppose if my business is a coaching, can I go for composition scheme under 10(1)? No. Beauty parlor? No. Interior decorator? No. So no service provider can go for 10(1). But these 3 people also, if they provide any other services beyond 10% limit, which 3 people? Manufacturer, trader and supplier of food service provider. If they provide service beyond 10% limit, then also they cannot be into composition scheme 10(1). That is this yes point. Okay, service provider whether taxable or exempted other than restaurant service or service up to limit allowed. N for non-resident taxable person. An NRTP cannot opt for composition scheme. Who is a non-resident taxable person? Who come from outside India to India and is engaged in supply of goods or services in India and don't have any fixed place of business in India. I already gave you an example in discussing ITC itself. What is that? So usually cricket players, right now IPL season is starting. So therefore cricket players who are coming from outside India to play the cricket will be coming under NRTP, non-resident taxable person. Can they opt for composition scheme? No. Are they required to register? Yes, they are required to register but cannot opt for composition scheme. Then I for interstate supplier of goods or services. If I make interstate supply of goods, or interstate supply of services, I am disqualified from the composition scheme. Then non-taxable supplies. What are non-taxable supplies? Alcoholic liquor for human consumption and petroleum products. If I am making that, I cannot go for composition scheme. For example, generally can a restaurant opt for composition scheme? Yes. But in the restaurant, if they are selling liquor, can they opt for composition scheme? No. They cannot opt for composition scheme because they are making non-taxable supplies. Same way, can a supermarket go for composition scheme? Of course, they can go for composition scheme, no restriction. But what if the supermarket is inside a petrol bunk? They cannot opt for composition scheme because petrol and diesel is non-taxable supplies. So a person who is making non-taxable supplies cannot opt for composition scheme. Then E, supply of services through e-commerce operator. For example, generally restaurant can opt for composition scheme, but if the restaurant is selling food through Swiggy or Zomato, they cannot opt for composition scheme. Can supplier of goods through e-commerce operator opt for composition scheme? Yes. Underline here, only services is given, but goods there is no restriction, only services. Supplier of goods through e-commerce operator. For example, I am selling goods from Amazon or Flipkart. Can I opt for composition scheme? Yes, very much yes, I can opt for composition scheme. Then R for RCM. RCM under which section? 9 subsection 4. When 9 subsection 4 is applicable, there is a promoter or builder who is making purchases from an unregistered person. If they have not paid GST on that, they cannot go for composition scheme. But this point is irrelevant because first of all, their turnover will easily cross 1.5 crores. Promoter or builder, by selling one flat itself, it will be more than 1 crore. So easily they will be coming out of the composition scheme. But this point is there. So if there is an RCM under 9.4 not paid stock held as on the date of opting for composition scheme, they cannot opt for composition scheme. Then C for casual taxable person. Who is a casual taxable person? A person who is coming from other state to this state and is engaged in supply of goods or services is known as casual taxable person. But remember, if they know the recipient before providing the services, before traveling here, if they know the recipient, then they will be coming under not CTP, normal interstate supplies. For example, we have a faculty, advanced accounts faculty, Chiranjeev sir, who is from Hyderabad. Okay, he is coming to Chennai and he is taking. So is he having any fixed place of business in Tamil Nadu? No, he is not having any fixed place of business in Tamil Nadu. Also one more faculty, so Sudarshan sir, who is taking auditing. He is not from Chennai, Tamil Nadu. He is from Kerala. He is coming and taking class here. He don't have any fixed place of business. Okay. And yet another faculty by name Gautam sir. He is also law faculty. He is also from Hyderabad. They don't have any fixed place of business in Tamil Nadu. But will they be required to take CTP registration in Tamil Nadu? No, because they know recipient. Who is their recipient? THARUN'S Brainery. So due to that reason, they know the recipient. It will be interstate supplies for them. They don't have to take CTP registration. If they come here, and if they announce a batch, so we are taking classes, and if you want, you can come and join with us like that. So now in this case, when they come and take class here, they are sourcing the recipients now only. They don't know the recipient before traveling, correct or not? So now in that case, they need to get a CTP registration, casual taxable person registration. That is this. Okay. So casual taxable person. Okay, sir, if they are taking casual taxable person, can they opt for composition scheme? No. They need to take CTP registration, but they cannot opt for composition scheme. Then M for manufacture of certain notified goods. What are those notified goods? So ice cream, edible ice, pan masala, tobacco and tobacco products, then aerated waters. Aerated waters means which is, so raw material for soda industry, beverages industry, they use raw material as aerated waters. In that aerated waters, they add essences, and that's where we get different Pepsi, Coca-Cola, then Sprite, Mirinda, etc. like that. So all these things will be coming under raw material, aerated waters. Why these notified goods they cannot opt for composition scheme? Because they are telling these notified goods industry is so big that they don't want them to escape from tax liability. They should definitely. But however, if there is a trader who is supplying these goods, can opt for composition scheme. A manufacturer of ice cream cannot opt for composition scheme, but ice cream shop which is selling ice cream can opt for composition scheme. See there, the entire restriction is only to the manufacturer, not to the trader. So what are those goods here? Ice cream, edible ice, pan masala, tobacco products, then aerated waters, bricks and roofing tiles. Okay, these people cannot opt for composition scheme. Now whatever we have discussed here, these points are common even for 10-2A also. For 10-2A also these points are applicable except the first point, that is service provider, because in case of 10-2A any person can opt for composition scheme, any service provider can go for composition scheme. You can see here above non-applicability is same for 10-2A except that any service provider can opt for composition scheme under 10-2A. So now come back. So what is the difference in conditions? So that S9 RCM, these are the cases where they cannot opt for composition scheme. Now you understood about 10-1 composition scheme? Yes. Now look into 10-2A composition scheme. When you read 10-2A also we need to make a comparison between 10-1 and 10-2A. So who can opt for composition scheme 10-2A? See there, manufacturer, trader and any service provider. So what is the difference? 10-1 only manufacturer, trader, supplier, food service provider, but here any service provider, a coaching center, a beauty parlor, an interior decorator or a consulting service provider, any person can go for composition scheme 10-2A. But what is the limit for composition scheme 10-2A? Aggregate turnover during the previous year should not exceed 50 lakhs. For 10-1 what is the limit? 1.5 crores or 75 lakhs. But for 10-2A the limit will be 50 lakhs. And all states it will be 50. There is no special category states and all for this. For 10-1 only we have. Is it clear? There 150, 75. Here it is 50 lakhs. Then what is the current year limit? There 150, 75 and here it is 50. Means current year when they cross 50 lakhs, they need to come out of the composition scheme under 10-2A. And what is the rate at which they will be paying GST under composition scheme 10-2A? Only one rate, that is 6%. In that 3% CGST, 3% SGST. 6% of what turnover? Taxable turnover or total turnover? Total turnover. But under 10-1 we have multiple rates, correct or not? So manufacturer means 1% of total turnover, trader means 1% of taxable turnover, supplier, food service provider means 5% of total turnover, like that. But here it is always 6% of total turnover. And what is the difference in the conditions? 10-1, that is manufacturer of notified goods and supplier of notified services cannot opt for composition scheme in 10-2A. But actually speaking, there is no services which are notified in this regard. So supplier of notified services cannot opt, but notified service is not yet notified. So we don't have to bother about that. Got it? So therefore manufacturer of notified goods cannot opt for composition scheme. So the conditions are same. Here S9 RCM, there it will be, that is section 10-1 it will be S9 RCM, 10-2A it will be 9 RCM. Means any service provider, come on concentrate, can opt or cannot opt, can opt for 10-2A, but in 10-1 it will not be possible. Okay, next one. What is the meaning of aggregate turnover for determining the eligibility to opt for composition scheme? So meaning of aggregate turnover, what is the general meaning of aggregate turnover? Taxable supplies, exempted supplies, non-taxable supplies, zero rated supplies. These four will come in aggregate turnover. Two things will be minus, 4 plus 2 minus, taxable, exempted, non-taxable, zero rated. What is minus? Inward supply under RCM and taxes will be excluded. Is it clear? But for the purpose of aggregate turnover in composition scheme, 5 plus 3 minus 5 plus taxable, exempted, non-taxable, zero rated, extra one more, pre-registration turnover, that is before getting registered. So I have a turnover of 40 lakhs. After 40 lakhs only I need to register. Concentrate. This year I commence business. Up to 40 lakhs I will not register. After crossing 40 lakhs I got registered and my turnover after registration is 120 lakhs. So now what is my aggregate turnover for the current year? 120 plus 40. That 40 is also my turnover only. So because I am only making sales there, but I not have got registered, that is known as pre-registration turnover. 40 plus 120, 160. Next year can I go for composition scheme? No. Why next year I cannot go for composition scheme? Because the previous year it exceeds 150 lakhs. So next year I cannot go for composition scheme. Are you understanding this? So pre-registration turnover should be included. Then 3 minus. What are the 3 minus? Inward supply under RCM, because right now we are computing turnover. Turnover means what? Outward supplies. So inward supplies will not come in turnover. So inward supply under RCM will be taken out. Taxes will be taken out. That is CGST, SGST, UTGST, IGST will be taken out. And interest income, interest on loans, advances, deposits will not be taken into aggregate turnover. Are you listening? Interest on loans, advance, deposits will not be considered anywhere in composition scheme. It will be excluded. So these 8 adjustments when you make, you will be getting aggregate turnover. Whether we need to see that aggregate turnover for current year or previous year to decide the eligibility to opt for composition scheme. Previous year. See there, aggregate turnover during previous year. So we need to check the previous year turnover only. And how the aggregate turnover is computed? State-wise or all India basis? Always remember A for all India. Got it? ATO, aggregate turnover, will be all India basis. Okay. So you can see this. Aggregate turnover will be computed on the basis of turnover on all India basis. Underline all India basis. All India basis means if I have business in 4 states, so all the 4 states turnover should be taken together. That is called as aggregate turnover, and will include the value of all taxable supplies, exempted supplies, exports made by all persons with the same permanent account number, but would exclude inward supply under RCM as well as GST group, and even interest income will not be considered for calculating aggregate turnover. Now, what is the meaning of turnover in a state or union territory? Where we have come across turnover in a state or union territory? If you observe 10.1, in the 10.1, I can provide service up to 10% of turnover during previous year. Here it is not aggregate turnover. Here I did not use the word ATO. Here only I use the word ATO. Here I use the word turnover. What is the difference between ATO and turnover? Both are same, except that aggregate turnover will be on all India basis. Turnover will be state-wise. Aggregate turnover ATO versus turnover TO. What is extra we have? A for all India. You understood or not? So aggregate turnover will be on all India basis, turnover will be state wise. That's what I have given here. So the same meaning will be applicable even for turnover in a state or union territory. Okay, but this meaning of aggregate turnover and turnover is applicable only for composition scheme, but not for registration. For registration, the regular meaning of aggregate turnover, what is that? So 4 plus 2 minus, what are the 4 plus? Taxable supply, exempted supply, non-taxable supply, zero rated supply, and excludes inward supply under RCM and GST taxes. Got it? Next, you can see here, person opting for composition scheme can provide service up to 10% of turnover. So a person who is under composition scheme will provide service up to 10% of turnover during previous year or 5 lakhs, whichever is higher. Why 5 lakhs? For example, this is the first year in which I commence a business. So what is my previous year turnover? 0. Means this year can I opt for composition scheme? Yes. But to what extent I can provide the services? Previous year 0, 0 into 10%, 0 or 5 lakhs. So at least 5 lakh services I can provide. That's why they brought in 5 lakhs, whichever is higher. Okay. And while computing this 10% limit, don't take interest on loans, advances, deposits. For example, concentrate, please listen. Previous year, my turnover is 120 lakhs. 120 lakhs into 10% is what? 12 lakhs or 5 lakhs, whichever is higher, 12 lakhs. Now current year, I have provided services, 11 lakhs worth of service I provided, and I have 3 lakhs of interest income. Whether I cross the 12 lakhs limit or I have not crossed the 12 lakhs limit, I have not crossed the 12 lakhs limit because only services other than interest you take. So interest is also service, but don't count that for composition scheme. So 11 lakhs does not exceed 12 lakhs. So therefore current year I have not crossed the limit. Is it clear or not? So that's what, interest should not be taken into account. And for these services up to 10% limit or 5 lakhs, whichever is higher is there now. For these services, which rate should be taken? The rate applicable to trader. What is the rate applicable to trader? 1% of taxable turnover. 1% of taxable turnover. That is 0.5% CGST, 0.5% is GST on taxable turnover. Are you understanding this? Then next one, other procedural provisions. In this other procedural provision, see there, how can I opt for composition scheme? That is, if I am already registered, I need to wait till the commencement of the financial year, and before commencement of the financial year, I need to make application for composition scheme. During the financial year, can I enter into composition scheme? Not possible. But now only I am getting registered. At any time during the year, I can go for composition scheme by making application for registration. See the first 2 points. Already registered. Apply in CMP2. CMP2 is the form for entry into composition scheme. When? Before commencement of the financial year. Suppose if I am not registered, not already registered, then in that case, apply in GST REG1 and select composition scheme at any time during the financial year. Is it clear? Then next, display composition taxable person. Where should I display composition taxable person? In every signboard, notice board or bill that I gave, I need to mention that I am under composition scheme, so that you should be aware that I should not be charging GST to you. Otherwise, what will happen? You don't know that I am under composition scheme, so I will normally charge GST. You will think that okay, he is a registered person, he is charging GST like that, but I may be under composition scheme, not possible, right? So due to that reason, I need to display that I am under composition scheme, and file quarterly return along with payment of taxes. So they will be filing monthly return or quarterly return? Quarterly return along with payment of tax in CMP 8 by 18th of the month following every quarter. Got it? Quarterly. And even they will pay tax also at the time of filing this return. Then whether they need to pay GST on advances or they are not required to pay GST on advances, they need to pay. So just now we saw time of supply, wherein I told you goods under FCM for a person opting for composition scheme or specified actionable claim, due date of invoice, actual date of invoice, or date of payment, whichever is earlier. For example, I am under composition scheme. This month or this quarter I received the advance for which I will be supplying in future. Should I add that for my liability? Yes sir, I have to, because I need to pay GST on advances. Same way, this quarter I gave the bills. This quarter I gave the bills for which the advance is already received in the previous quarter. Means at the time itself I would have taxed, correct? But this quarter I am giving bills, so therefore you need to reduce. So how to take? First you see what is the value of bill of supply during the quarter. Why bill of supply? Because a person under composition scheme cannot recover the GST from the recipient. So what is the name of the document that they will be giving? Bill of supply. So therefore we need to take the bill of supplies issued during the quarter minus advances which is already received pertaining to current quarter, minus plus advances received during the current quarter for which supplies will be made in future. So that adjustment we need to make. GST payable on value as per bill of supply during the current quarter plus advances received during the current quarter pertaining to next quarter minus advances received during the previous quarter pertaining to the current quarter. This adjustment we need to make, and on which we need to pay the GST under composition scheme. Then they need to file an annual return. So that annual return will be in GSTR 4 by 30th June of the succeeding financial year. It is not 30th April. Previously it was 30th April and now they have made it as 30th June. Then next point, all in or all out. What does it mean? That is, for example, I have 4 registrations. For 4 registrations, 2 registrations composition scheme, 2 registrations normal scheme. Is it possible? No. All the registration should be into composition scheme or all the registration into normal scheme. So I cannot do mix and match. Okay. Also remember, if I want to be in composition scheme also, all the registration should be under 10.1 or all the registration should be under 10.2a, but not both. So this is also applicable. See, this all in all out point is not only for composition scheme versus regular scheme, even for composition scheme also between 10.1 and 10.2a. Is it clear? But this word all in all out, I told you, I created. This is not there in the law. In law, that is in exam, don't write all in all out. They will not understand what all out you are talking about. You understood? So you need to write all the registrations of a person should be under composition scheme, or all the registrations of a person should be under normal scheme, but not both. Okay. So either composition scheme or normal scheme for all registrations of a person. They cannot choose normal scheme for few registrations and composition scheme for other registrations. Is it clear? Then next, this already we discussed. Composition scheme under 10.1 not applicable. Look into the next, validity of composition scheme. Validity of composition scheme, if all the conditions are satisfied, composition scheme remains valid and you can continue in the composition scheme. No need to intimate every year that you want to go for composition scheme like that. So if all the conditions are satisfied, option remain valid. What if the conditions are not satisfied? If the conditions are not satisfied, you need to pay tax as a normal taxpayer. For example, you cross the limit of 1.5 crores or you cross the limit of 75 lakhs or you started making interstate supplies, means you breach the conditions, means you need to exit from the composition scheme. What is the time limit within which you need to exit from the composition scheme? 7 days from the breach of condition. So whenever you breach the condition, from there within 7 days you need to exit. And what is the form for exit from composition scheme? CMP 4. CMP 2 is for entry into composition scheme. CMP 4 is for exit from composition scheme. CMP 2 time limit, before commencement of the financial year, I can go for composition scheme. CMP 4 exit from composition scheme. When? Anytime you can come, but whenever you breach within 7 days. Within 7 days. Okay. Then self-withdraw, voluntarily anytime you can file CMP4 and you can exit from the composition scheme. Got it? So, even when you breach the conditions, you need to exit mandatorily. Self-withdraw, anytime you can come out of the composition scheme. Suppose you breach the conditions, means what? Say you made supply of services through e-commerce operator, which is disqualified, correct? Breach of condition. Now, you continued in the composition scheme, but the department came to know. How they came to know? Whenever you made supply of service through e-commerce operator will update the information. So, based on that, so department came to know and immediately they are giving you a notice. So, that notice will be in CMP 5. Thereafter, you need to give reply. That reply will be in CMP 6 within 15 days. What is that reply? Sir, only one transaction I made through e-commerce operator. I am unaware. So, I will ensure that henceforth I will not make supply through e-commerce operator. Kindly allow me to continue in the composition scheme. Now, it is at the discretion of the GST officer. If the GST officer is a sadist, he will tell no, composition scheme disqualified. You need to pay under normal scheme. So, if he is a kind-hearted person like me, so then he will tell, okay, fine, continue, enjoy, like that. Because one transaction only, you can enjoy in the composition scheme. So, therefore, they will pass a order. What is the time limit within which they will pass the order? Within 30 days. Within 30 days from when? From the time you gave the reply. From the time you gave the reply, within 30 days, they will pass an order in CMP 7, either allowing you to continue in the composition scheme or denying the composition scheme. Either accepting reply or denying the composition scheme. Now, whenever you exit from composition scheme and go into normal scheme, you can avail the ITC on closing stock. Do you remember 18(1)(c)? So, you are under composition scheme, you are going into normal scheme, you can avail the ITC on closing stock. What is the ITC on closing stock? Inputs as such held in stock, inputs in WIP held in stock, inputs in FG held in stock, and capital goods also you can take. After reducing 5% for every quarter or part thereof from the date of purchase till the date of conversion, correct? And you need to file one form. What is that form? You need to file ITC 1. What is the time limit with which you need to file that form? 30 days from the date you have exited from composition scheme. That is this statement in form ITC 1. Within 30 days of intimation or application order, furnish details of stock of inputs contained in WIP or finished goods and capital goods. Okay, now you are going into composition scheme. When you go into composition scheme, what you need to do with respect to your closing stock? You need to avail ITC or reverse ITC? Reverse ITC. From normal scheme, you are going into composition scheme. So, you need to reverse the ITC. For reversal of ITC on closing stock, what is the form that you will file? ITC 3. ITC 3 for reversal. Now, these 4 forms you need to remember. What are the 4 forms that we have here? Like odd forms is ITC forms. So, say this. First we have 1, then next 2, and then 3, and thereafter we have 4. Okay. So, odd forms. What are the odd forms? 1 and 3. 1 and 3 is ITC form. 1 and 3 is ITC. 1 and 3 is ITC form. 1 and 3 is ITC form. Whereas 2 and 4 is CMP forms. 2 and 4 is CMP forms. Okay. ITC 1, ITC 2, sorry, ITC 1, then 1 second. So, this is CMP 4, okay, CMP 4. Now, ITC 1 and CMP 4, first ITC 1 for what? Availment of ITC on closing stock. Availment of ITC on closing stock. Then ITC 3 is for what? Reversal of ITC on closing stock. CMP 2 is for what? Entry or exit? Entry into composition scheme. CMP 4 is for what? Exit from composition scheme. Understood? Now, if you see here, this ITC first and last form is a combo. That is, whenever you exit from composition scheme, you will avail the ITC on closing stock. So these two is one combo, okay. These two is one combo. Then again CMP2 and ITZ3, that is whenever you enter into composition scheme, then you will reverse the ITZ on closing stock. You understood? So that's what I have given, ITZ1 and CMP4. ITZ1 and CMP4, this two is one combo. Whenever you exit from composition scheme, you will avail the ITC on closing stock. What is the time limit within which you need to exit from composition scheme? 7 days from the breach of condition, and you will avail the ITC on closing stock. What is the time limit for availment of ITC on closing stock? 30 days from the date on which you migrated from composition scheme to normal scheme. Is it clear? Whereas whenever you enter into composition scheme, entry into composition scheme, you will reverse the ITC on closing stock. When you can enter into composition scheme? Before commencement of the financial year, and you need to reverse the ITC on closing stock. So what is the time limit within which you need to file ITC 3? 60 days from commencement of financial year, because only before commencement of financial year you can enter into composition scheme. So from commencement of financial year within 60 days. Understood these 4 forms here? Mainly for MCQ this will be useful. Then CMP5, just now we discussed show cause notice. CMP6, reply to notice. CMP7, issue of order. Notice anytime they can give, and reply to notice within 15 days from receipt of notice. Order within 30 days of receipt of reply. CMP8, return to be filed by a person opting for composition scheme. What is the time limit within which they need to file return? Within 18 days from the end of the quarter. Then denial of composition scheme, whether it is prospective or retrospective. Concentrate. What has happened is that you have made interstate supplies, okay. So during the financial year 2024-25, during the financial year 2024-25, say somewhere on 18 September 2024, so you made interstate supplies. When you make interstate supplies, you are disqualified from composition scheme, correct na? But what you did, you continued in the composition scheme. You continued in the composition scheme. So even for the next financial year also you continued. So but you did not exit, not exited. And thereafter somewhere in 2025-26, the officer will identify that you have breached the composition scheme, and they pass an order. What is that order? Order in CMP 7. Order in CMP 7 to, like already they gave a notice, you gave a reply, etc. They passed an order. So in CMP 7 on 30 November 2025. So now whether the date of denial of composition scheme, they want to deny the composition scheme. To deny composition scheme. Now what will be the effective date of denial? It may be prospective. Prospective means from 30/11/2025. Prospective means from 30/11/2025 they will deny. Or it can be retrospective. But not before 18/9/2024. You understood? It can be either prospective or it can be retrospective, but not before 18/9/2024. Is it clear here? So that is the maximum time by which they need to do that. So not before 18/9/2024. Understood with respect to this? So that is this point. So you can read that. In case of denial of composition scheme, option to pay tax under composition levy by the tax authorities, the effective date of such denial shall be from a date including any retrospective date, as may be determined by the tax authorities. However, such effective date shall not be prior to the date of contravention of provisions of CGST Act or CGST rules. Next, when is it advisable to opt for composition scheme under 10(2)(a)? You tell me. So whenever 10(1) is not possible, because if you are a trader, 10(1) is only better because 1%. Manufacturer also 1% in 10(1). Supply of food also 5%. But if you go for 10(2), you need to pay 6%. So it is better to continue in the composition scheme 10.1. So if you don't have the composition scheme under 10.1, when if you are engaged in service other than supply of food, then you can go for 10.2a. So who is exclusively engaged in supply of service other than restaurant service can go for 10.2a. And if you are also doing manufacturing, trading and supply of food service provider, but you want to provide beyond 10% limit services, then in 10.1 it is not possible, so you need to go for 10.2a. Is it clear or not? That is, who is engaged in supply of services along with supply of goods or service of value exceeding 5 lakhs in a financial year. Why 5 lakhs in a financial year? Simple pa, your turnover during the previous year should not exceed 50 lakhs, then only you can go for 10.2a. So should not exceed 50 lakhs means somewhere like 40 lakhs, 30 lakhs, 20 lakhs like that. Now, what is the limit up to which services can be provided? 10% of that or 5 lakhs, whichever is higher will be 5 lakhs. So if you want to provide service beyond 5 lakhs, you can go for 10.2a. That is the logic behind it. Next, meaning of various turnovers you can see. We have come across in composition scheme 3 turnovers. One is aggregate turnover for determining the eligibility to opt for composition scheme. That is, if you want to go for composition scheme, your turnover during the previous year should not exceed. So whether we need to check this aggregate turnover for current year or previous year, previous year. Then next turnover we have come across is 10% limit. I can provide service up to 10% of turnover during previous year or 5 lakhs, whichever is higher. So therefore, that is also again previous year turnover. Turnover for determining 10% limit for services previous year. Then next one, turnover for payment of GST under composition scheme. Whether we need to see previous year turnover or current year turnover. Current year turnover. We need to see current year turnover because current year only now we are paying tax under composition scheme. Are you understanding this? Then what is the basis? Aggregate turnover will be all India. Turnover for determining 10% limit will be state or union territory. Turnover for payment of GST under composition scheme, state or union territory. Now see the meaning of aggregate turnover. What is that I told you? 5 places. What are the 5 places? Taxable, exempted, non-taxable and then zero rated. Correct? Then next, what are 3 and even pre-registration turnover also place? 5 places pa. What are the 5 places? That is taxable supplies, exempted supplies, non-taxable supplies, zero rated supplies and pre-registration turnover. 3 minus. What are the 3 minus? So interest on loans, then inward supplies under RCM and taxes. Okay. Now this is the meaning of aggregate turnover for determining the eligibility to opt for composition scheme. Now from this to this, what is the difference? From aggregate turnover to turnover for determining 10% limit. What is the difference? Here aggregate turnover will be all India, but this will be state or union territory wise. Rest of the information is ditto, copy paste. Everything is copy paste. Only difference is what? This will be on all India basis, this will be state or union territory wise. Then what is the difference between turnover for computing 10% limit versus turnover for payment of GST under composition scheme? So turnover for determining 10% limit we need to take previous year turnover, but here we need to see current year turnover. And you should not have non-taxable supplies or zero rated supplies or interstate supplies. If you are having this during the current year, previous year you can have non-taxable, current year you should not. Previous year you can have zero rated or interstate, current year you should not have. If you are having, then definitely you are disqualified from the composition scheme. So not applicable means what? These supplies cannot be made during the current year, and if made, the person is disqualified from the composition scheme. And also pre-registration turnover is excluded because you start paying GST only after crossing the threshold limit. For example, current year only you commence a business. So current year can you opt for composition scheme? Yes, why not? Because previous year is 0. Current year you can opt for composition scheme. But when? After you cross the threshold limit for registration. So up to 20 lakhs or 40 lakhs you are not required to register. Thereafter only you register and pay. When you register and pay, you need to pay tax only on turnover after registration. Correct or not? So pre-registration turnover you don't have to pay any GST. That's why it should be excluded. So with this, composition scheme is over. One more point you just add here, that is, I told you now all in or all out. So there you write down this point. Also with respect to few registrations 10.1, also with respect to few registrations of a person, also with respect to few registrations of a person, section 10(1) and remaining registrations section 10(2)(a) is not possible. 10(2)(a) is not possible. You understood? Like few registrations 10(1) and few registrations 10(2)(a), they cannot decide. So they need to go for either 10(1) or 10(2)(a), but not both. Is it clear? Then, so we completed composition scheme fully.